closing trades, the big mitigating factor today could be the fact that the rupee has already reached the 69 to the dollar mark. But in the thick of earnings, RBL Bank posted a strong set of numbers on the back of the robust 35% jump in profit. So let's bring on board Vishwavir Ahuja, MD and CEO at RBL Bank. My colleague Neha Bothra spoke with him to decode the numbers. Will the management be able to sustain the growth momentum? Let's hear out what exactly you have to say.
I think there's no secret sauce. It's just a accumulation of years of effort, prudence, strong governance, and building certain business engines which have reached certain levels of scale and escape velocity, and they're sort of, in a sense, paying back. In that sense, we've reached a certain market position in some of these businesses. So if I really talk about our particular growth engines or business engines, on the wholesale side, we have the large corporate and the mid-market business. Each of them have been growing steadily over the years and continue to grow at above 30% each. This quarter, approximately 32-33% each. On the non-wholesale side, again, all our various businesses, on the micro banking side, on the card side, on the other kind of retail lending products, both secured and unsecured, those businesses are growing at 45% plus. So they're all contributing in that sense. And I think behind all this sits a very strong layer of very tight risk management. So we ensure that our portfolio quality is always of a high order. And I think taken in combination of all these factors, we are able to generate, strong performance across all financial metrics.
You did mention to me that there is an absolute absence as far as a specific concentration risk is concerned towards any particular sector.
Yes.
But if you could indicate to us this quarter, where really did you see the growth coming in from? Did you see a large chunk of it come from demand for financing by many companies that are looking to participate in acquisition of assets that are on the block, or any specific renewable power sector, for example, that was a significant contributor to this chunk of growth?
So the answer to that is no. Actually, nothing was out of the ordinary in terms of the growth numbers this quarter. In terms of the acquisition related opportunities, while some of them may be opportunities, I don't think any of them are reflecting in this quarter's numbers. The growth has been across the board. The growth has been in all segments. The growth has been on a sort of business as usual basis. And we are very confident that given the kind of market position and penetration that we have now created across the various businesses, we will continue to see this kind of growth even going forward in the remaining quarters of the year.
As far as margins are concerned, could you help me with an outlook on that front? 4% is something we have been talking about, and we are at 4%. Will we sustain 4% levels, or do you expect margins to improve in the coming 2 quarters?
See, it's like this. Getting to this milestone was itself, a very desirable achievement, which we have now got. I think the way we look at it is that there is pressure on the cost side. The cost of funds, etc., the way the environment is stacking up in terms of rates, there is a pressure from that side. So if we can even maintain 4% plus, I think that would be a very satisfactory achievement. We're very confident of maintaining 4% plus. And that confidence emanates from 2 major factors. One is our improving CASA position, and the second is that in terms of our asset mix, advances asset mix, we are, the relative proportion of our non-wholesale, relatively higher yielding, higher margin businesses is increasing. Yeah, so that allows us to be confident that we can continue to grow with this level of NIM. I mean, whether it grows 3, 4, 5 basis points more or not, is very difficult to predict. But yes, certainly we are confident of maintaining 4 plus.
Most would agree that we will see a hardening as far as the rates are concerned going forward. How do you think this will pan out for RBL Bank as far as cost of funds are concerned? If you can indicate what really the position on that front will be. Also, if we should expect some of these rate hikes to be passed on to customers, and if you could share a timeline for the same.
So, a very good question. In the last quarter itself, we were able to sort of pass on at least 10 basis points net increase from our MCLR to the wholesale customers, and I think some of that is going to happen more in the next few quarters. So while cost of funds did go up by about 20 basis points, I think our sort of NIM or our yields grew more than 30 basis points. So on a net basis, we were able to show higher NIMs, and part of that is by being able to pass on some of that cost increase. Some of the MCLR changes we've done in the last few days will then be reflected in the second quarter numbers. So while there will be cost push, I think we are able to pass on some of these cost increases and hence be confident of maintaining NIMs.
A final question on asset quality. It's been stable for the past 3 quarters. We saw a slight hiccup before that. As far as asset quality is concerned, you did mention during the interaction that you don't really expect a significant impact coming from RBI's circular issued on the 12th of Feb. Overall, if you can still give me some guidance on asset quality, on how you expect this to move in the coming quarters, will we be able to maintain the current level, or do you anticipate some pain in the SME pocket which perhaps could reflect in the coming quarters?
So, firstly, I want to say while we reported gross NPA number of 1.4%, which is more or less flat to the last quarter and down from the last year by 10-12 basis points. Our total stressed book, which includes the effect of the RBI circular and other developments, is only 10 basis points.